afternoon, everybody. Welcome to your Wednesday edition of the TraderMerlin show. This will be the final show for the week, so hopefully we get everything covered and all your questions answered on today's program. So thanks for joining us. I know many of you are probably already in transition, moving on to some vacation destination to be with family and friends. So since it is my Friday show, I will cheers to all of you. I hope you have a fantastic Thanksgiving. Spend it with family and friends. Do something fun because we'll have to get back to business on Monday. Now, I will do a little bit of a trading week wrap up. Not too much going on with regards for me for trading today. I made a couple of small little trades, but nothing really big. Let me get a sip of this wonderful Frey Ranch bourbon, and then we'll get going. Whew, that's a good one. All right, so if you guys have questions, feel free to type them in. Let's get that rolling because this may be a shorter show. I've been out working in the crypto class. As you know, I did 2 hours of cryptocurrency courses last night for Online Trading Academy. I did 2 hours this morning plus a company lunch and been pretty darn busy. So I haven't had a chance to do a lot of preparation. I will do my best to get any questions I can for you. Let's start things off with our wonderful little, I try to have fun with the graphics on this program, Trading Week Wrap-Up. Well, ultimately we look at the Trading Week, what happened this week. I mean, honestly, it wasn't really a horrible thing. A lot of times on vacation weeks, it gets much lighter. The last 2 days have been pretty darn good. Here's your S&P, which is up 0.74% on the day. Really important part of this, though, is you're still not above the high that we saw on this wick right here going back to November 15th. Now, all in all, this looks great. S&P up 0.71%, 2-day just monster rally. We kind of talked about this impulse, this big move up that started on Thursday, November 10th. We had that huge move up, consolidation without really giving back much of the gains. That's actually a relatively bullish sign. And now you have the breakout to the upside here. Let's see if it can take out that high from the 15th. If that does happen, then you will no problem see the S&P rally up to 4140, 4140 very quickly, which is another 100 points away from current levels. That would be a pretty nice big rally. Of course, you know, we are closed tomorrow. We are open on Thursday or Friday, but it's going to be a fairly light volume day. Now, this week has been light volume, but let me start with the bottom, work our way up to the top for today's trading session. Now, if you're like me, I love having John Rowland on the program. There's always something interesting to learn, especially in areas that I am not strong with. For example, I'm not the world's best oil trader. I'm not the world's best natural gas trader. I'm one of those guys that see market trends, and I look at them and go, okay, yeah, I see why this is going here, and this is why this is doing that. Oh no, there's definitely a show today, Lisa. It's tomorrow and Friday. I'm taking Thursday, Friday out. John Rowland yesterday was talking about natural gas and kind of going through his hypothesis as to why markets may move the way that they will in the future. And I loved his commentary. And whether I believed it or not, it's up to me to make that decision on how I'm going to allocate my portfolio and make trades off of it. So this morning, actually last night after the show, I was thinking to myself, man, natural gas might be a pretty good play. And he brought up Boyle, which is, of course, is a super leveraged ETF for natural gas. And I thought, you know what? Tomorrow, I'll buy some Boyle in one of my accounts. It's a longer term account, retirement account, actually. It's actually a Roth IRA. I can't trade options in that one. For some reason, they're being jerks over there at E-Trade. Anyway, I was fine. I'll just use some leverage instruments when the time is right. If not, I'll find myself in just standard equity indexes, etc. So I was going to buy some Boyle for that one. I don't know if you guys saw what happened out there today with natural gas. Let's bring up the natural gas chart, and then we'll go into BOIL. My natural gas is way down here. Here's my natural gas, an 8% move. A crazy move up in natural gas today, which ripped through those highs that he had talked about. And it looks to me like you're going to get more upside move. Now, the natural gas next supply zone was just pennies away from where it topped out at today. So we might consider it having touched into that overhead supply zone. But let's look at Boyle. B-O-I-L. Oops, not Boyle. And today you're looking, interesting, only up 6%. Okay, so it gave a lot back near the after during the day. But all in all, same basic picture. This is leverage, so it should have been up a lot more than the natural gas futures, which were up 8%. This should actually be up more than that. But huge pop up, and the levels he was calling out significantly higher than where we currently are at. So I thought that was kind of an interesting little play there. He had talked about potentially $10 going into the first part of the year, and then spring watching it drift all the way back down to around 5. So unfortunately, I think I missed that boat. I needed one more day, dang it. But I loved having him on, also talking about his bearishness on crude oil. I thought was interesting as well. And you guys saw it today. That's our worst performer, down 4.3%. on the session for crude oil, which brings us pretty much dead on back to the lows we saw from late September. You can see those it's kind of a double bottom forming here right now, even with this nice big hammer formation that we saw 2 days ago. So that was crude oil, Russell 2000, and everything else positive. Now, the Russell was the weakest of the group, only up 0.33%. You can see just a slight little green candle here and not getting back to those highs from last week. The Dow, however, breaking through those highs and sitting at the dead high of that trading range. Now, initially, a week and a half ago, when we talked about getting into this overhead supply level, it made for a great short trade. Now, I know some of you right now are looking at this going, ooh, maybe short again. I don't think so. Judging by the way it closed today at the dead high, you've already eaten away pretty much all that supply, and it didn't get pushed back down. So I think that this is poised on the Dow for more upside movement, which means that most of these other indexes are probably going to have pops to the upside as well. Now, Bitcoin and the cryptocurrency, I hate cursing. I know some people hate it, but there's no nice, you can't say this word or this statement without using what's a somewhat bad word. It's a shit show. There's shit coin, so I guess now that's part of our common nomenclature, not hopefully too offensive. But you can see we've had 2 green candles, but all in all, it's just nothing going on here. There is a Sam Bankman-Fried will be giving a presentation. I just saw the tweet that he posted. He's going to be at some conference giving a presentation. I have to say, if I was someone who literally destroyed billions of dollars worth of wealth and potentially causing people to do horrible things, right? A lot of people, when they lose all their money, stories time and time again where people commit suicide and things like that. Look, it's just money. Don't ever do that. It'll get better. However, the amount of anger and hostility at somebody like Sam Bankman-Fried of FTX at this moment in time, if it was me, that's the last thing I would ever be doing, would be getting in front of a public venue where somebody can come after me and take a shot. Kind of surprised to see he's even thinking about doing that, but that's going to be on the 30th, I believe. My guess is he will back out or do it virtually. He'll be extradited. I don't know. If he's smart, he'll move himself to a non-extradited country that doesn't do extraditions. If he's smart, he would do that. That's what a few of the other guys, Do Kwon has done, and a couple of the others that have been kind of caught off guard and cause a lot of financial losses. They are moving themselves to non-extradition countries. We'll see what Sam Bankman-Fried does here going forward. But I thought that was kind of crazy. I still think there are shoes to drop here in Bitcoin, but all in all, hey, I'll take a 0.59% gain on the day, 16,150. Now, moving on, one of the few trades I made today was in the commodity space. I am still long a significant amount of SLV. Now, you're not looking at silver here. You're looking at gold, since my gold was taken away from me due to my options expiration, and my strike price took it away. Nice move up in gold today. You had a 0.6% gain. Nice hammer formation. Could be an even bigger move coming based off of that over the next few days. I looked at this, and it just really felt like you had a really nice rally. Expected this to sell off a little bit more. If you notice the bottom of today's trading activity for gold futures, the low was 17.19. And if you follow the Monday morning must knows that I put out for Online Trading Academy, my level was between 17.15 and 17.05. So unfortunately did not get to the level that I'd be looking at buying into gold. Serenity now. I was wanting to. I should have sold some calls against it. Should have sold some puts to buy at that 17.10 level, but I did not. Lo and behold, we had a nice move up today in gold. Now, SLV, an even better gain, 1.96% move to the upside. Since I have such a big position and I am deep in the money on this one, I actually sold the 2050 calls today, which generated me another about 1.5% yield for the next, less than 1 month. So whatever happens, I'm going to make 1.5% on my SLV no matter what. And if it keeps on rallying up to 20 and 50 or above, great. I'll make a little bit of money there. I'll deal with it. But that was the one trade I made with the options market today. I had a couple orders out to open some new positions, but they didn't get to my strike price. So moving on. All right, next on our list is the S&P 500, which showed 0.5% gain to the upside. Again, just like the Dow, right near the upper end of that range, just about to break through those highs that we saw back on the 15th of November. That high was 4,050. Today we're at 4,033. So very close to breaking through. And I guess the bigger question is, once we break that high at 40.50, where to? Well, my guess is you'll probably see 41.36, somewhere right up in there, and a nice little pop to the upside. And here's your NASDAQ. Best performer on the day, up 1.05%. Happy I dumped my my NASDAQ. A little bummed I still have my S&P. I probably should have dumped that, but we'll wait and see how it pans out over the next couple weeks. I have options that go all the way out into January on that one, so it's all right. We'll just leave it. All right, so that is your broad pieces. If you look at some of the economic data that happened this week, let me bring up my slides here to show you. Here is the economic calendar for today. All in all, since we're doing a trading week wrap-up, data's been looking pretty good. The retail sales number was probably the major piece that happened this week, and that was a very good-looking number. Almost everybody, except Target and maybe one or two small retailers, almost all of them were showing much better than expected earnings, which is a good sign for markets going forward. The Fed is not really supposed to be concerned with retail sales numbers, but again, they're looking at consumption, they're looking at demand, they're looking at the average consumer going out there and buying things to drive market prices up. All in all, more buying means higher inflation. However, we need buying to keep the economy growing and keep GDP going. So it's kind of this catch-22, but all in all, looking good. Here's where things change a little bit for the global community. This is your economic calendar for the 23rd. Oh, hold on a second here. Wait, hold on. I messed up. I thought I had it all mapped out, but this is what I get for stressing and doing things last second. Where was that one? Okay, well, I guess, I thought I had it as my second slide, but for some reason, it didn't show up. Let's do it this way. Get rid of that. Bring this one up. All right. I guess that was it, but it should have shown the final results. So I will show you a different image here. There it is. This is the final results. I don't know why I didn't show the updated version. Anyway, here is your economic calendar for today. What's noteworthy from the top? Let's just look on our way down from France, Germany, the EU. Take those three as a lump. You see France looking weaker on their services, better on their manufacturing. Germany looking better on their manufacturing and slightly weaker on their services. So getting a little bit weaker over Germany, which is the important one. The entire EU, though, all in all, looking better than expectations for both of these numbers. So that's great. Here is what the UK was doing. They are below 50, which is not a good sign. However, the numbers weren't that bad. They pretty much stayed the same. So that's great. But what really matters is what happened out here in the US. You can see durable goods orders, which are TVs, refrigerators, etc., reflecting that great retail sales numbers and consumption surging. We went from 0.3. Expectation was we're going to go to 0.4%. We came out at 1% gain, and we also had a big increase in just the core durable goods orders, which take out transportation and aircraft. So that's a great piece of data. Slight increase in unemployment claims, which is not that big of a deal. The only piece that surprised me today is down here at the bottom. You see 588,000 new homes sold last month. They're expected to drop to 571. I thought it would actually be worse than that. I thought we were looking at maybe 550, 520. We came out at 632, and I don't know what is causing that much of a surge. When you look at the 30-year fixed rate mortgage, it doesn't really make much sense. Here's your 10-year. You can see the 10-year bond has certainly dropped, and that may play a role in it. But it's not like it's cratering and going back down to the lows we saw from 2021. It's a pullback. And from my gut tells me that we'll probably get down to this 360, possibly that 350 mark. I think, you can see the tail end of these candles going back into October of 2022. We're down about 3.56. So my guess is you'll probably get to the 360, maybe 375 mark, which we are below now. Hesitate and then start to curl back up here based off what the Fed has been doing. Those are the macro pieces there. From your economic announcement table. Really, that's the only stuff that was moving this week, and I have to leave it at that. Let's see. Who knew Solana's value drop percentage would rival meme coins? Insane. Well, for people who are in the crypto world, when you look at how connected they were with Alameda Research and FTX, not really much of a shocker. It's kind of like saying anything that was associated with Luna when they went down in May. Were we that surprised to see those ones collapse as well? Not really, because it's the tide that sinks all the boats, or raises the boats, depending on which way that tide's coming in. In this case, the tide for FTX and Alameda Research just evaporated. No more water in there at all. That lack of liquidity, or maybe even an abundance of selling pressure from their holdings, I think it's no surprise. Solana down 96% off the highs. We talked about that in the CIO class today. I just bought some Solana, and it's a very speculative investment. The question at this point from everybody has to be, will Solana survive? A lot of people say it's done, it's doomed, it's not going to make it. I think it will. I think it's just a unique technology that most people are not using, and we'll see if it actually makes it. But yeah, you're right, Joe. Who would have suspected that this entire crypto ecosystem would have had such a fall from grace? Here is the Solana chart that Joe is speaking of. Bring up my SOL. Sold your soul. It's up 14.8% today. It's finally back above where I got out of it, or where I bought it. My most recent purchase was $13.90. We'll just keep this line on here as a reference. Coordinates. Let's go $13.90. Oh wow, can I do it that way? There we go. That's my most recent purchase where that red line is. So it was great for a couple of days, and we're back up to like $15 and then sliding. And now we'll see if we get some stability out there. And it really depends on what happens with Sam Bankman-Fried, FTX, Alameda Research, and that whole crazy soap opera that we were all witnessing firsthand. Now, I didn't mention some of the gains in crypto, but since Joe threw that one out there, I'm just going to sort here and show you the gains. FTT, which is the FTX token, down 11%, but no real shocker there. Secret was a huge mover up yesterday and now gave it all back. It's part of the ebb and flow of crypto. But I'm going to go to the top here because what's healthy here is seeing a lot of these big gainers out there. It's your Dash, Solana, Serum, also showing some pretty darn big gains. Dash is one that's really just interesting over the past two trading sessions. It's gone from $34 to $44. Gotta love a 27% gain in just a few days. Love it. Also Binance, which is one of my major holdings, Litecoin as well. So we are seeing some nice relief rallies here, if you will, after all the pain. But just a question of, are we done yet? I'm not really sure if we are, in fact, out of the woods yet, or if there's more pain ahead. Okay, let me go to a couple listener questions. So I'm going to do this one just because KF, I don't know if you're here. You asked this one yesterday. You also tweeted it. It was having to do with cryptocurrencies. So he says, what do you think World War III would do to Bitcoin and cryptocurrencies in general? I don't really think it would have that dramatic of an effect. Obviously, nobody wants to see World War III. If it does happen, what are we going to see with regards to market behavior? Typically, when we have a declaration of war from one of the major superpowers, the U.S., UK, Japan, something like that, what you typically get, and in my experience, it's just with the U.S., the previous 5 or 6 invasions that we've done, certainly going on since 9/11, Afghanistan, Pakistan, all that. When you initially get the declaration, and hey, we're now sending a boatload of troops over there, the markets will take a sharp dive. Now, the crazy part is, how long does that last? Because no one wants to think about World War III, and maybe this time is different because of Russia and the nuclear weapons. But if you typically watch the results, it shoots down for a day or two, and I mean a sharp slide, and then all of a sudden it screams up. So if there is, in fact, and this sounds absolutely awful, I'm not an evil person, but I would wait a day, and on the initial big market dump, start buying, because you probably see a big market rally. Now, I guess the looming piece here of uncertainty is, does Russia do something with their nukes? Now, I'm specifically, if I'm talking about the equity markets here, but what does it really going to have an impact on crypto? No, I think it's going to be much more impactful on individual equities, because typically what that does is spur economic growth. It means there's more people being employed in defense contracts, there's more people building weapons, there's all that type of stuff. So it would, let's see, decentralized would make more sense in a world war. And I would agree with you, because in a decentralized marketplace, any party can have access to those markets. Whereas if you are centralized, they may say, okay, well, this country is now cut off from this system and you're not allowed to access SWIFT payment networks. That could create some problems, but I don't see it being so dramatic in the crypto space that like, oh, wow, you got to do this or that. I think it'd be much more impactful for the equity markets. Now, that said, I'm not changing my course. I think that my portfolio is going to stay the same whether we go have a war or not. Regardless whether it's this one or one down the road. I don't think it's that impactful on crypto. I think right now the biggest impact on crypto is the uncertainty, the regulation that's coming, and the liquidation that you're going to see probably in the coming months of different portfolios as they sell out to pay off creditors. Oddly enough, World War III would be good for manufacturing and the economy in general if we are... True, exactly, Joe. And no one wants to... come on, we're going to Thanksgiving. Let's be thankful for what we have. It's horrible to think, A, about a world war, but B, A nuclear war? I mean, I don't ever want to witness that. Of course, I never wanted to witness a pandemic either, and we survived that one. But no one wants to see a world war or any sort of nuclear weapons go on. That would be worst case scenario. And at that point, like you say, we may not be alive to live it. Ricardo, there are no dumb questions. I finally bought a hardware wallet question when setting up the seed phrase. Is it case sensitive? No, it's not case sensitive. Nope. Just make sure that you write down your seed phrase very clearly as you could possibly write it down. Double check it. And then it usually asks you to put that seed phrase into the ledger, the hardware wallet. Triple check it, all right? Because without that seed phrase, you won't be able to access anything that's on that device. So it's really important that you keep your seed phrase safe, secure. Don't just write on a piece of paper that maybe something spills on it. I have taken mine, I have laminated mine, and I have them in extremely safe places. And I'm working on secondary backups of those seed phrases because it's ultimately the key to my device. And without that, I don't have any access to it. All right, that was KF's question, World War. There's 2 more that came through. Tim, I thought this was an interesting one. Tim says, if the dollar keeps dropping, what's going to happen to the markets? Well, before I dive into that, I realize I have this nice tall glass of Frey Ranch bourbon. Let's have another sip of that one. Why don't I? The shows tend to get more enjoyable the more whiskey I have. For you guys, anyway. All right, let's go look at the dollar index. The old Dixie. No tattoo. Nicola, ciao bello. Spero tutto bene over in Italia. Benvenuti ai suoi genitori. So say hello to your parents for me. I know you're probably home for the holidays, Nick, so great to see you joining us. Enjoy Trento. Nick is one of my good friends when I lived in Italy. Oh, the stories I could tell, but that would be a completely different show. Okay, sorry, back to the dollar index. That's the Dixie. 106.15 is where we are at right now on that dollar index. And I gotta say, I'm a little bit surprised. I kind of felt like we would see a little bit more stabilization and then bounce back up, but we are coming into some demand zones down around 105.25. So slightly lower than where we are at now. And of course, you asked Tim, if the dollar keeps dropping, what's going to happen in the markets? A dollar falling is good for the markets. You want to see the value of the dollar falling, which means that international parties can buy more U.S. goods and services, right? I think that's going to be good for especially multinationals. And typically, when you have a dollar rising, as it has been, it starts to squeeze out the economy a little bit. It makes capital a little bit harder to get, more expensive to buy goods and services. But if it drops, it should be a good catalyst for markets going forward. And I think that's part of the reason you saw these last 2 days been very bullish. Well, look at the dollar. You've had very bearish. So just think of this as an inverse relationship. And for Tim and others, there is a lot of great resources out there that you can use to look for correlations. And one of those, my personal favorites, is MRCI. I'll bring that one up for you. And if you guys want, I can paste the link in chat, although I think most of you probably already have it. So just let me know if you want it. Here is the MRCI table, which is a free intermarket correlations. Now, of course, you're going to need to know your futures products here. But as you notice, you have Dow futures, S&P, NASDAQ, Russell, then you've got your 10-year bonds, you have Swiss francs, you go through the currencies, then you have commodities like gold and silver and crude oil and cotton, soybeans, and you can see the relationships there as far as how tightly correlated something is or loosely correlated. So you asked what's going to happen to the markets if the dollar keeps dropping. Well, if you look here, you see the DX, that's the dollar index. So let's go to the DX and look at that against the S&P, which is right here. There's a negative 80% correlation, which means, if the dollar drops 1 point, the S&P should rally. Or sorry, if the dollar drops, let me say this again. If the dollar drops, let's say 100 points, then theoretically the S&P should rally 80. Right, so there's a direct inverse relationship there between those two, and you can see some are much stronger. For example, the euro and the dollar, almost exact opposite. That's the way it should be. Vikram, you want it? You got it, sir. Control C and Control V. There you go. It's a really cool free resource for you. And what I love about this is, we always hear this phrase. At least I love this phrase in the financial markets. Everything works until it doesn't. Right? That's the trend is your friend. Well, the trend is your friend until the bend at the end, which basically says the same thing. Everything works until it doesn't. The trend works until it doesn't. Friendships work until they don't. Food tastes good till it doesn't. It's a profound statement, but it's very true. So what you can look at here are there are some very historical correlations. For example, the relationship between dollars and commodities. But you can look up here and you can actually change it. You can make it, oh, are those correlations looking good on the 30-day period, 60, 90, 120, and 180? So you can see maybe how there's a disconnect in the longer term, and maybe now it's becoming more closely correlated, but really kind of cool to see those correlations here. Anyway, MRCI is the site. It's Moore's research, some really good stuff there, and this is a free piece that you can get really quickly. So there you go, Tim. I got that one answered. And then this one's from Les. Les, I think you're probably here with us today, and it's a very tricky one to answer. It has to do with the VIX and the S&P 500. So this came from yesterday on the YouTube channel, but I didn't get a chance to get to it. My apologies there. He says, is there a time that you can address the issue of both VIX and ES both being down? So the grand premise here is when the S&P starts to sell off, the VIX should surge in price because it generally means that people are flocking to buy put options, right? The VIX, for those who don't know, is simply puts versus calls, right? Is there more fear in the market or more optimism? If there's more optimism, people are buying calls. If people are pessimistic, they're buying puts. Those are the premise behind the VIX. Now, there's that inverse correlation because obviously VIX is based off of the S&P 500. So how can you have, and I think this is your conundrum, Les, is how can you have the S&P selling off and the VIX not rising? I would put more emphasis on the S&P because that's the underlier, right? If we do see a market situation where the S&P is declining, see if I can bring one up for you. Okay, you see a situation like this, and this is obviously on a daily time frame, and it's a much bigger time frame. In a situation like this, you're going to see, without a doubt, the VIX surging. And I could bring up the VIX and show you. Unfortunately, I can't add it to the chart because I don't pay for the subscription fee here. But absolutely, the VIX was surging from August 16th through September 20th. And just to make that point, August, boom, you can see that just a huge surge up in the VIX, same period of time. So that's normal. Where you might see it different is every day doesn't have to be the exact opposite. So here you have 3 or 4 big red candles. These are the last 4 candles of the VIX. And if I go to the S&P, you're like, well, wait a minute. I had out of those 4 days, one of those is actually red as well. So I'm seeing a red S&P and a red VIX. It does happen, right? And I don't think personally there's anything that you should look at and go, oh my gosh, this is telling me. I don't think it slams you in the face with an explanation. It just means that people aren't quite fearful and running to buy puts. Now, that said, if you have a day where the markets have dropped and people aren't buying puts, to me that kind of does create a signal. It says, look, markets are selling off and no one's really worried about it because they don't think it's going to go down. If institutions really felt that the markets are going to tank on this little red candle right here, right? If they felt that the S&P was really going to go down further, they would have been rushing out to buy puts. But you notice it's a small condensed range, not really a lot of activity. I think that's the main reason why you didn't really see a surge up in the VIX. Because it was so calm and flat, you don't really have fear, do you? Right? This is not a fear day. I'm looking at for those who listen to the podcast, I'm looking at the 21st of November, so just 3 days ago. Notice how tight the range is. Small real body, right? Low volume. Here's your low volume on that one. So this was a non-eventful day. It was just kind of boring, right? It's like that day where you're sitting out at the ocean trying to catch some waves and like nothing's happening. So even though you had a red candle, it didn't create any fear. Now, when you have days like this where you have a big market move, that's different. That starts to create the fear, and then more people will start running for the exit. So that's how you can have it happen less, is generally when you have a small, narrow, condensed, boring day, people aren't looking for puts, right? They're not freaking out. But when you have a bigger day, that's when fear starts to set in. Now, we could look at that VIX. What time we got? Oh, I made it a half hour. I didn't think I was going to make it a half hour show today. Another question I've received in the past is, do you look at the VIX as respecting supply and demand? I do not. I don't really care about that stuff. However, notice where we're at here on VIX, okay? We've had a really big sell-off, which means that people are not looking for insurance. People aren't protecting themselves. They're complacent. If VIX is surging upwards, that means they're freaking out. But really, since October 11th, VIX is in a free fall. Now, do I think it's going to stop here right around 20? My gut tells me we're going to see a holiday rally and a Christmas rally. and go through to the end of the year. And I think January is where we start to see things really take a bit of a nosedive. But I don't know. I just really don't know which way things are going to go. I don't generally play, oh, VIX is at demand, it's going to bounce. Well, more importantly to me, if VIX is going to bounce off of a quote-unquote demand zone, it's more important that I see the S&P screaming into a supply zone. And I wouldn't call this a great supply zone that it's running into right around the 40-40 mark. Hopefully that helps, Les. A little bit of clarity there. Remember, calm days, you will have, red candles on both the VIX and the S&P, or maybe even green candles. But when it's a low volume flat day, really doesn't make a big difference. All right. I've got through what I was going to get through, and I've got 32-minute show. Any other questions you guys want me to answer before I hang it up here and call it a day? I think I got through the questions that came through. There's really nothing to look at for the economic calendar for tomorrow, right? Unless you're trading cryptos, markets are going to be closed. So you're looking for a 24-hour, 365-day a week, 365-day a year market. Crypto is the only one. Even currency markets are closed at times. That's not a bad time to buy 120-day puts or calls, depending on your bias, right? But if something is very, you mean if VIX is that low? Yes, absolutely, Big Eb. If you're looking at the VIX this low, historically, this has been the lower end of the range for pretty much the whole year, right? We'll call it since 2020. This has been the lower end of the range. So in theory, you're looking at the bottom of the range. Yeah, maybe if you're buying something out 120 days, you're right, or more, then this might be a good point. However, given the way these markets have been moving, I don't know if I would be wanting to aggressively short this market. It's just looking real. Oops, let's get that back where it belongs. My lines have been broken, but I will keep those there for a while. Tom says, I believe Nicola was asking if you advise getting a tattoo of your seed phrase. Oh, I didn't actually catch that, but Nick, you want me to get a tattoo of my seed phrase? Probably not a good idea. If you do, you should find some way to put them in a different order, right? Because there's 24 words. You don't want those to all be, that would be kind of bad. I don't know. No, probably not going to do that. No seed phrase, no tattoos. I offended a girl one time. She was all showing her tattoos and, boasting how she got this one. And look at this one. And what about this one on my butt cheek? And she says, do you have any tattoos? I said, nope. She goes, why not? You seem like an interesting guy. I said, would you put a bumper sticker on a Bentley? And she kind of rolled her eyes a little bit. She said, you're saying you're a Bentley? And I'm like, well, yeah. I'm a Lamborghini. Is it Cardano stablecoin news? The final push Cardano needed to break out? No, it's one piece, Joe, of their ecosystem. And as I mentioned many times here, as also in my CIL, if you want your ecosystem to thrive, you have to have a stablecoin in there. So there's actually a couple that have popped up as far as Cardano's ecosystem. It's just I think the failures that are happening on other marketplaces, like Ethereum's bottleneck with transaction speeds, with Solana with their whole many issues, like just breaking down and shutting down for a while, or the issue going on with FTX and them right now. I think that starts to build up credibility a little bit for Cardano, and I think it's one of those ones that's slowly taking shape where people will slowly start to look at Cardano and say, okay, yeah, maybe this one is legit. It hasn't crashed, doesn't have any major issues. You don't see any drama really about it other than the haters of it. But we'll see down the road how it all transpires. Okay, I think that's going to do it for me, guys. I have to say I have been slacking a little bit. I have missed a couple of days of my 100 push-up challenge, but you guys have a few days left to keep this going. Tom, are you still doing your 300 bodyweight reps? I hope you are. That's pretty damn good. Gary, 100 push-ups a day, my friend. I need before and after pictures, Gary, because if you're doing 100 push-ups a day, you're going to feel the difference. Lisa, I'm pretty sure you're going to keep doing your yoga because you love that. Master that plank. Jay says he's going to run 8 miles a day for the next 30 days. Les took on, I think, more than you can chew here, buddy. He says an hour a day trading education, walk 5 miles a day, upper body exercise, leisure reading, and time with wife. That sounds like your day's packed. And Todd, finish your trading plan. I need to see that by the end of the month, bud. Next week, I will try to get Ryan Watkins on the program. I owe you a trading plan show, but that is your November challenge list right there. I have a few days off. It's tough, right? It starts to build up. I did 200, or day before yesterday, I did 200 push-ups. I didn't do any yesterday, so I'm a little bit lagging on that one. But I will continue to do more exercising going forward. I'm starting my challenge next week. All right, we'll start in December. Yeah, for the month of November, you're going to start next week, Joe? I will do another one in December. The one I've always wanted to do is a 100 burpee challenge. If you don't know what burpees are, they are brutal, but they are the full body workout. I've tried it before. I made it 8 days. Absolutely just savage. All right. Well, excellent, everybody. I hope you enjoyed the show today, even though it was not your normal, a little bit more basic. And I know some of you are probably off to visit family and friends. So cheers to all of you. I hope that you do something fun, spend some time with loved ones, and just enjoy what makes this life so damn special, which is family, friends, good times, and less hate, more positivity. And I hope that you all have a fantastic Thanksgiving. So thank you guys so much for joining. I am thankful for all of you as part of my Thanksgiving. I should say thank you all for being a part of the show and helping me grow it slowly, but at least having a venue and a place where I can talk about markets to my heart's content, and you can participate as well. So cheers. Have a fantastic Thanksgiving. I will see you all on Monday. Take care.